Welcome traders to another Tickmill trading update with me, Patrick Munnelly. Want to take a look at the S&P 500 using the E-mini futures contract and put together some potential action areas for the trading week ahead and some price objectives that we can realistically target. So before we jump into the technical picture, quick review of the macro side of things. US markets, bond markets are closed today. Cash bond markets are closed for Veterans Day. So we're likely to see a little bit of reduced participation across the board. Moving into Tuesday, we have a bunch of Fed speakers in the Tuesday evening time. Kashkari, Barkin, Harker, and Barkin again we hear from. Then moving into Wednesday, we are looking at another slate of Fed speakers, which is a theme for this week. We'll hear from three further speakers, Logan, Muslim, and Schmid. And we will also get US CPI data, looking for a 2.6% print there, month over month 0.2%, core 3.3%. And US core CPI month over month 0.3%. Want to pay attention to that. If that comes in hot, that could start to once again weigh on Fed pricing. And certainly after last week's FOMC meeting, the focus is going to be around on this inflation data. Then heading into Thursday, we get PPI year over year looking for 2.3, month over month 0.2. Get US jobless claims, another bunch of speakers, but importantly, we will hear from Fed Chair Powell on Thursday after the PPI and the CPI data. So we can expect some potential volatility there. Powell speaks in the final hour of trade over in New York. Then rounding out the week on Friday, we have retail sales and industrial production. Stateside are the major macro events for this week. So it's going to be about inflation and Fed speakers. Now, obviously, in the background, we still have the machinations regarding the US election, and we're starting to hear about how Trump is shaping or potentially shaping his future cabinet. That information is going to be important and potentially market moving, certainly around who's going to be US Treasury Secretary. So I'm going to keep an eye on the wires with respect to that. And we have the ongoing situation in China, where markets remain nonplussed with the stimulus efforts that have been touted over there. And so that's another narrative or dynamic to keep in mind. And the other one that I would keep an eye on as well is Bitcoin. Bitcoin basically rising now almost in unison with the Nasdaq as a proxy, so to speak. But Bitcoin is printing new all-time highs. I posted some video analysis this morning on that. Suggest you check that out for further insight into what I'm thinking with respect to Bitcoin and where I see the next opportunity. So moving to the S&P 500, and we are looking initially at the weekly and the daily time frame. Weekly time frame, we are trading once again back into the wedge resistance, currently trading just above there, printing above 60.50s in the pre-market. And the weekly price setup after last week's bullish reversal pattern, negating that bearish candle that we saw, flipping the 5-period volume weighted average price bullish. And that remains so unless we get a close below 58.86. And we also have the value area high, 59.25. So we've got some work to do. Well, the bears have got some work to do if we're going to get something going on the downside here. Certainly that would be the first trigger point, I think, in terms of potential trailing stops getting triggered and seeing some reversal in the momentum. Possible, less probable at this stage, though we do have some decent momentum divergence developing. I think I would prefer to see it just a little bit higher before thinking about the potential for some profit taking and a near-term correction, but overall the posture remains bullish. Moving to the daily time frame, and our target on the upside, given the implied volatility for the week, is plus or minus 83 points from the open last night. So puts us up into the 61.13 handle area as the target on the upside. To the downside, we have 59.47. Do note that we still have momentum divergence in play, although the momentum study has flipped bullish and is breaking out through the trend channel resistance, although we are stretched on the stochastic multi-time frame, stochastic on both the weekly and the daily time frame. Again, these are factors to consider, but they're certainly not going to drive the trade. They're not going to be the prime driver for trading activity, but things you want to keep an eye on as to my mind, they flash potential warning signs. Again, I'm not talking about a market crash or even really a significant correction. Maybe a pause at this stage would be more akin to what we could expect. So let's look at the weekly setup and how I'm looking to trade this as we go into the week. So I'm running long positions. I've locked in a good chunk of profits on my trades at the moment. From last week, I had the 59.76 add to my long positions. I've also got a 57.34. I've locked in 250 points on the 57.34, and I've locked in about 40 on the 59.76. And we are trading now into the initial resistance for me on the week, which is this 60.55 to 60.65 area. We want to see how we open in terms of the cash market. I think what we could see here going into the open, the way the price action is setting up, we're squeezing into that open. We're about 90 minutes away from the cash market opening. So if we squeeze up into that area ahead of the open, that could set up a near-term corrective move whereby markets just take profit at the open and we see a pullback. I've adjusted my weekly bull bear zone to the 6,010 to 6,000 level from this morning's update. I'm using this morning's update in terms of weekly bull bear zone now as first support, which is back down into this 59.65, 59.55 area. What I'm anticipating, or the ideal setup for me, would be that we squeeze into the open, we get a pullback into the bull bear zone and get an opportunity to add again to long positions. We're going to target the weekly projected range resistance at this 61.10, 61.15 area. Now, from there, if we can get some momentum divergence in play, that's where I see the potential for some profit taking to develop. And certainly we could think about a move to retest this 60.50 area from above is the plan. Alternatively, if we do get a deeper corrective move, I'm certainly keen to watch what happens into this 59.60, 59.50 area. That will be another area I'll be paying close attention. Bullish reversal patterns to engage on the long side. Firstly, looking to retest and break the bull bear zone from below, and then target the prior market highs and onto our upside objective. Really, it's going to take a move through 59.40s, which is the weekly implied volatility support area, to suggest a more meaningful high in place, local high, and then we could be starting to think about some more sustained pullback to the downside, and obviously that 59.50, 59.40 area would come back into view. 58.50 to 58.40 would be the area I'd be paying attention to on the downside, but very much at this stage, my focus is on the upside and looking for how we trade at these initial resistance and the secondary resistance. So both of which I will look to trade from the short side if we can get some divergences confirmed. As always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.